And I'm going to share my screen. Okay. Can everybody see?
Yep.
Okay, fantastic. So welcome to the class, Twin Cities First-Time Home Buyer class. Don't make these 6 costly mistakes. As a first-time buyer, you might feel concerned, stressed out, not sure where to go, intimidated, anxious, uncertain, not sure where to start. Well, after today, hopefully all of those feelings will have gone away. Who am I? My name's John Mazzara, and I'll be teaching the class with Pete Moy today. And I've been selling homes since I've been 21, so that's been the last 40 years. I graduated from St. John's from undergrad and St. Thomas for my grad. I've sold over 1,200 homes across the Twin Cities. I work on both sides of the river. Actually, I was out in St. Paul this morning writing up an offer on a property for a buyer. I work with buyers, sellers, and investors. I don't do the loans, but my lenders do, and I know what the programs offer. So think of me as your financial quarterback where I can direct the different lenders that might have the programs that would work for your situation. And collaboratively, then I work with the lender and they get you pre-approved, and then I help you find a house. You can Google me. I'm happy to give you references. You can see what I'm all about. Like I said, I've been doing this a long time. And the reason I've been able to do it a long time is I have lots of satisfied and happy clients. Many of them I've actually worked with them on 3 generations. So they're grandparents, the parents, and now the kids of those of that generation. So 3 generations in one household. Initially, when we sit down with you, one of the first forms that you're going to see is a disclosure of agency. All agents have to do this whenever there's a substantive conversation about real estate. And what it does is it explains who the people are that you're going to deal with in your real estate transaction. So the first one might be the seller's agent. That's the one with the sign in the yard. They represent the seller. Then there's a buyer's agent, somebody that helps you find a house. That's the buyer's agent. Sometimes the listing agent and buyer's agent work for the same company, and that's called dual agency. Or if you were to buy a property and have the agent that had the sign in the yard write up the offer, that would also be dual agency. And another way that you can work with an agent is through something called facilitation. So facilitation is where we do the paperwork for you, but we don't represent anybody. So you may have come to an agreement with a parent, grandparent, friend, something like that, and you have already decided the price and the terms, but you need it written up. And that's what we would be able to do for you under facilitation. The very end of the buyer or agency agreement is a notification of where you can do some research to find registered sex offenders, both a website and a phone number. Another website you could visit is communitycrimemap.com and do some research on any area or property that you might have an interest in. Okay, initially, we may end up doing what's called a touring agreement. It expires in 7 days. It allows us to open the door and show you a property. But if we're going to work together, and then we're going to go under what's called a buyer's agreement. And a buyer's agreement uh, looks something like this. This is ours over at Remax. And if you look at line 30, there's a $650 admin fee. That's part of your closing costs. That's due if you're successful at the time of closing buying a property. And then the way that I get paid is under the 2.7%. It's in your buyer agreement that you're responsible for that. However, we reflect that back in the purchase agreement and ask the seller to pay that on your behalf on line number 406. So it's part of the buyer's agreement reflected back and as an ask to the seller in the actual purchase agreement. This gives you some data about what's going on in the Twin Cities. It's always a month behind because the month has to have occurred for the data to be calculated. I'm going to call your attention to 3 spots. The first one is the third line down, the median sales price. And it gives you a comparison from March of last year to March of this year. And what we see is that the median sales price is about 380 and it's remained constant. Now, if you move your finger across over the rolling 12 months, you see it's up a little over 2%. So this spring we've had, weather up and down, from 80 degrees to 30 degrees and sometimes below zero. So it's been a very unusual spring weather-wise. And then we've had lots of stuff going on in the world and in our Twin Cities, and that's also contributed to maybe some hesitancy with regards to buyers entering the market. However, right now, it's very common to get multiple offers. And a number of homes that I'm showing are selling right away and in multiples. So I think we're in full force in the spring market. I think you're going to see a positive number when April is reflected, but we'll have to wait until May to get the April numbers. But the market, I think, at least for myself, is very strong at the present. And interest rates are not bad. They're right around the low sixes. They had been in the high fives, and they're also kind of bouncing around in response to a lot of the different world events that are happening. Long term, nobody knows what's going to happen with rates. However, the 50-year historical norm is somewhere between a 5 and 6% range. And I think my own personal guess is that will trend down over the next 18 months, moving from where we're at now to the lower fives. That's my guess. Okay, so do you know when the best time to buy a house is? Best time was yesterday. Do you know when the next best time is? Tomorrow.
Today.
So what's happening is that home prices traditionally appreciate. Now we have had a period of time from maybe '08 through 11 where maybe not all homes were appreciated because we had some different things going on in the world, but normally real estate does appreciate because the cost of labor, land, and material tend to go up and not down, and that's reflected in the home prices. It's also a function of interest rates. The lower the rates are, generally speaking, the higher homes will increase in value because more buyers will be eligible to purchase a home. But the takeaway from this slide is that long term, real estate tends to appreciate, and it might be something you want to get involved with as soon as you can so that you can also participate. The longer you wait, the more it might cost you. Okay, so here's a quote: don't wait to buy real estate and wait. That's how you accumulate wealth, at least historically speaking. So what are the steps to home ownership? Well, one is to come to a class like this to learn the process. Second step is to figure out your loan, and that's to get pre-approved. Now, I prefer a pre-underwritten file versus a pre-approved file. And the difference is that when a file is underwritten, you're submitting your documentation, the lender, loan officer have reviewed it, and then they're actually signing off on it if it's been fully underwritten. And that means all we're awaiting is the title work and the appraisal on the respective property that you might have an interest. It makes you a much stronger buyer in a multiple offer, and it eliminates a lot of the angst of, well, what if I'm not qualified? Well, you're going to know if you're qualified if you're underwritten because that's the purpose of being underwritten. Now, the types of loans that are available to everybody are conventional VA, FHA, but VA in that grouping is only eligible for veterans. So if there's veterans on the call, you could look at VA. Otherwise, everybody else would be looking at a conventional or FHA loan. If you're in a rural area, you'd be looking possibly at USDA. If you're self-employed or an investor, you might be looking at a non-qualified mortgage slash Alt A. That's another product that's out there. So the bread and butter, though, is conventional FHA, and that's where most buyers are going to fall. Down payment assistance programs are many, and they're adding more every day. Well, maybe not every day, but very frequently. And today, many of them are being funded again. Some of them in the past had run out of money, and then after the first of the year, sometimes they get a new allocation of which it's available until it isn't. One of the down payment assistance programs, the Minnesota Housing Finance Agency, is evergreen, meaning they don't run out of money. But some of the cities and counties, as Pete had mentioned, have a certain amount of money to work with an allocation, and that's available until it isn't. So if you're intending to use one of those programs, again, then time is of the essence. That allocation and that money doesn't wait around forever. It's available until it isn't. So once you get pre-approved and we know how we're going to put your transaction together, then we start house hunting. So you house hunt here, I say, with your favorite realtor, which could be me. But otherwise, if it isn't me, it's going to be the agent of your choice. And what they should do for you is build an MLS search. I know somebody had mentioned going out to Zillow. Zillow is a redisplayer of the data from the multiple listing service, the MLS. My preference is to set up the search right from the MLS. That way you're dealing right with the source. Doesn't get any purer than that. Um, we identify the minimum criteria, the areas that you want to look at, and then set up a drip campaign, meaning this is what's available today. And then as new properties matching that criteria come into the marketplace, you're immediately sent an email regarding that property. In a fast market like we're in the spring, you need to be on top of it and you need it to be immediate, meaning you need to find out when that property is available, and then within 24 hours, if you can, open up a time in your schedule to get on over and see it. If it's a good property, not only are you going to like it, but so are others. And very frequently, especially in the spring market, we end up in multiple offers. So once we find it, we'll negotiate with the seller. Hopefully, we'll get it the first time, but for example, I'd mentioned I wrote an offer this morning. This was the second time for that particular buyer. We lost out in a multiple previously, but we actually like this home better, so we hope it works. When I get off this PowerPoint presentation and this call, I'll check my email and see if we were successful. Um, After you make an offer and once it's been accepted, then you typically have a home inspection. And if you're buying a multi-family type of condo or townhouse, then you get the rules, regs, and bylaws from which to review. An appraisal is done, title work is completed. You continue to submit documents to your lender like current pay stubs and current bank statements. And then the underwriter signs off. Your loan is clear to close. We go to a closing and you sign, sign, sign. And then you get to move in and start to unpack. It looks something like this if we were to do it graphically. Over here, what we have is a picture where we're at today. So the 9 steps to home ownership. Right now, everybody is on top, getting educated. So just figuring out what you need to do and how to do it. Then you're going to figure out what you can afford. Now, the normal rule of thumb is roughly 4 times your income is what you're going to be eligible for. So if your W-2 income, you make $100,000, 4 times that is $400,000 would be the amount of the mortgage. Now, that, of course, is subject to your credit score and your other outstanding debt, like car loans and student loans and things like that. But that's a rule of thumb, roughly 4 to 1. And then you don't have to spend all that. So you may say, well, I don't want to get a $400,000 mortgage. You don't have to. So that's where you figure out what you can afford in your budget. And that way you know that if we start at, let's say, a lower range for your search and you're not finding what you want, we have the ability to move that search criteria if you want to do that, if you're not finding what you want in your initial search range. And that's what a lot of people do, is that they start early enough that they can get familiar with an area and price range. And then if it's not meeting their needs, then they can make the modification, and then we can move to the next step and make some changes and show you, different properties that might work. Shopping for a mortgage loan is dependent on what programs that you're going to use. Some of you bank at big banks, some of you don't. Some of you bank at credit unions. Uh, my preference is either a larger bank or a broker. And today we have Pete Moy on, and he is a broker that has access not only to all the products that are traditionally out there, but all of the extra unusual products that are out there. And that would be the non-QM product, which is the product for self-employed people that maybe have more difficulty getting a loan, um, and investors that might want to increase their portfolio that are also unable to get loans under traditional financing. Pete also does reverse mortgages, and he is my down payment guru. So he has access to many down payment assistance programs. So if you're on the call looking for down payment assistance, I would highly encourage you to reach out to Pete, and his information will be on this PowerPoint shortly. Reach out after the call, get pre-approved. Pete would love nothing more than to talk to you, review your situation, and give you some guidance, whether it's for today or for tomorrow. Um, if you're not quite credit ready, he can give you some suggestions too on how you can improve your credit such that will make you eligible for a loan in the future. But once we've got the mortgage in place, we've got a pre-approval letter or a pre-underwritten letter, then we actually go out to look for houses. I won't show somebody any houses until I have that pre-approval letter in hand. I'm happy to set up searches for you so that you can get familiar with value. I'll do that all day long. But as far as walking through a door and showing you the property, normally the way that I work is that we need a pre-approval or a pre-underwritten letter so that we can actually do something. Otherwise, we're spending time that in looking at properties that might not be something that you're eligible for. So the financing part is number one, figuring out what you need as far as a mortgage and a loan program and getting that letter in place. Once we shop for a home, we eventually make an offer. We negotiate on that purchase agreement. Sometimes it's back and forth a couple times. Sometimes they accept it right off the bat, and sometimes they just reject it. So it's a moving target, but we all have the same goal, which is to get you into home ownership. And most sellers want to sell, most buyers want to buy. So most of the time we come to an agreement, unless we get beat out in a multiple offer. Once the home is locked down, then you can have a home inspection. Now, some cities require the seller to have a home inspection before they can even put the home up for sale. Cities like St. Paul, Minneapolis, South St. Paul, West St. Paul, Bloomington, St. Louis Park, Richfield, Orono, Golden Valley, those are just some of the cities that have seller requirements. That you could rely just on that seller required inspection, or you could go beyond that. Most people go beyond that. So they look at that as another set of eyeballs, another baseline from which to draw information from, but they usually hire their own home inspector. Cost of that is between 650 and 750. That's an independent person that you've hired to come on out and find all the problems. Um, they're there, and because you paid them to do it, they will find the problems, even if they're picky little problems. So I always tell people that the value of a home inspection is to know your future projects, know exactly what you're getting into. It's not the time to renegotiate and ask the seller to build you a new home. If you want a new home, then we need to go where they're building new homes in areas like, let's say, Corcoran, Rogers, Dayton, um, all over Centerville, Forest Lake, um, Rosemont, and Grove Heights. That's where they're building new homes. If you want new home, then we need to go there. Otherwise, if we're buying something that's 100 years old, like most of St. Paul and a good portion of Minneapolis, then the home is going to be older and it's going to have various degrees of obsolescence and various degrees of things that are no longer in code that were once in code. So just to set the expectation, the seller's not going to rebuild you a home. If there's something that's hazardous, they typically will address that for you, but they're not going to redo the whole home for you. And we'll go over that too as I walk you through the home. I point out all of the problems and things that I think you should consider. And then from there, we address it. So we just have a question came up in the chat. Let's see what that is. How much do inspections typically cost? Like South St. Paul, Ember Grove. Okay, so the question on that, or the answer on that is a buyer home inspection is going to cost you about $650 to $750 for the baseline. Then you can add on things like a radon test. That's another $200 typically. You can add on a sewer line scope test. That might be another $300. Maybe a chimney inspection. That's another $300. A mold test, another $300. So the inspections, other than the baseline, are usually right in that $300-ish range. Now, the city inspections, those are something that the seller pays for. So you as a buyer don't pay for it. The seller has to pay for it and provide that to you as a buyer. And they're supposed to do that at the same time that that home is put up for sale. Those inspections typically run between $300 and $500 at the respective cities. They may require from that report, if there's something hazardous, the city might require that the seller fix it. Once the home inspection is done, there might be some issues that we need to address. We address them within that time frame. Typically, inspections are 5 to 10 days, most common being something like 7. And we have to have all negotiations from that inspection completed. If we don't, then we either move forward as the house is, or we have to submit our cancellation. But there is a hard stop on our timeline from that negotiation. Once the inspection is done, you let the lender know you're good to go. If it's Pete, you call up Pete and you say, hey, Pete, go ahead and charge my credit card for that appraisal. He'll process that next step. The appraiser company will send out an appraiser. They'll validate the home as being good collateral for a mortgage, and that means that it's worth what you've agreed to pay or more, and that there aren't any issues that the mortgage company is requiring that the seller fix. Once the appraisal's back, they'll do some more verifying. From there, they'll do a final approval, and then you go off to the closing. Closing takes about 45 minutes to an hour. You're going to sign about 50 times. Once you're all said and done, then the house is yours and you get to plan your house party accordingly. So that's how it works. The process can take as little as 30 days. I would say most of the time it takes 30 to 60 days. So if you've started the process today, we could have you in a new home within 60 days or less if you wanted. Now, if you're looking for something very specific in terms of a house, it could take you longer. And also, if you have a very narrow area, we're waiting for a home to come up in a certain area, that could take longer. So those are things that you have to decide is are you going to have a broad search or a narrow search, and then your timeline will be accordingly. Okay, so mistake number one that I see a lot of people making is ignoring the first-time buyer incentive programs that are out there. And the programs that are out there dovetail, meaning they work perfectly tongue in cheek with the Fannie Mae and Freddie Mac loans, which are conventional loans, and the FHA loans as well as the VA loans. So you can use down payment assistance on all of the regular types of loans. In general, a first-time buyer is somebody that hasn't owned a home within the past 3 years. So you may have been a homeowner in the past. If you haven't been the last 3 years, you're going to be considered a first-time buyer. You may have a relative, for example, that used to own a home that doesn't, and they're like, well, I used to own a home. I don't qualify for these programs. The answer is they might. So 3 years of non-home ownership typically is what qualifies as a first-time buyer. Most, if not all of the programs require that you complete a class that's either online or in person. Unfortunately, this class doesn't count for it. It's usually 8 hours and you receive a certificate. So in order to utilize the down payment assistance, they want to make sure that you understand home ownership. And that's the purpose of the class, to teach you how to be a homeowner. If you're successful, then you won't get in trouble, or you have a less likelihood of getting in trouble and ending up in foreclosure. Lenders don't want your home. They want to lend you money and they want to get paid back. And they want you to be successful in home ownership. And that's the purpose of the class. Some of these classes can be taken in advance of getting the mortgage. Some of them are taken after you get the home under contract. So I'm going to say what you need to do is talk to the lender, i.e. Pete, discuss which program or programs might work for you, and then he'll direct you to the appropriate classes that would qualify for that first-time buyer education. So he's able to give you a link where you can register and do that. The nice thing about doing it online, if the program that you want to utilize allows online, is that you're able to bop in and bop out, meaning you can do 2 hours here, 2 hours there. It doesn't have to be all in one sitting. Otherwise, you may prefer to give up a Saturday, 4 hours in the morning, 4 hours in the afternoon. So there's that option too. But each down payment assistance is different, so you need to work with a lender that's knowledgeable that can guide you appropriately. Okay. What is a first-time buyer program? Well, they can be specific to city or county. The statewide one that a lot of people utilize is the Minnesota Housing Finance Agency. And they have a couple of iterations on that, a $14,000 and $18,000 program. I won't dig too deep in the weeds on the programs. Just know that they're out there. Somebody like Pete could certainly help dig in with that as it pertains to your situation. What all programs are, though, is dependent on your income, your assets most times, and your credit score. So if your credit score isn't high enough for a program and you need to utilize that one, then we need to wait. If your income exceeds what the allowable amount is, well, then we can't use that program either. Or if you have too many assets. So the purpose of down payment assistance is to bridge that gap for people that can make a payment but haven't been able to accumulate the asset, i.e. the down payment and closing costs. So if you're sitting on 50 grand, for example, you're probably not going to be eligible for a first-time buyer program, even if you meet the income and credit criteria, because you have too many assets. So it depends. And that's why sitting down with the lender is so important. And that's why we always do that first so that we get that part of it figured out. And then we go out and we do the fun stuff. We go out and do the home shopping. Some loans, first-time buyer programs, are forgivable. Some are deferred. Pete mentioned one from Woodbury that's deferred, meaning you're going to accumulate interest that you're going to need to pay. Edina has one like that as well. And then there are down payment assistance grants as well, or some loans that are forgiven over time, but not all of them. So some are loans, some are accrue and you pay it when you sell the house, some are forgiven. So some of them are stackable, which means that you can add one, two, or three or more if hypothetically they would work together in tandem. That's something that Pete has done. Pete did a record number on one particular sale. He did 4 stackable programs. That's the most I've ever heard of. So imagine that he had to do 4 different loan applications for each of those products and then get them all approved and coordinated. That's somebody that was dedicated in helping that home buyer maximizing her opportunity. So that's just a plug for Pete. Most loan officers are not interested in doing down payment assistance because it requires them to do 2 loan packages or more, depending on how many they may stack, which is twice the work and only get paid for the first one or very little for the second one. So um, Pete is dedicated to helping first-time buyers, and he does a wonderful job, and that's why he's on the call today. Here's an example of somebody that could be using down payment assistance. Hypothetically, we have a 250 purchase price. We have somebody using a conventional loan with a minimum of 3% down, and the closing costs are coming in at 2.5%. So they're going to need 13,750. Well, you might recall we've said a couple of times that you can buy a house with as little as $1,000. So where do we get the difference? That money is borrowed from Minnesota Housing Finance Agency. In this case, it's 12,750. So there's 2 loans, there's 2 payments. One's a first mortgage of 242.5, the other is a second mortgage of 12,750. And together you have 2 payments, but you only needed 1,000 out of your own pocket. There are other spots that you can go online to look up what programs might exist. This is a snapshot of what's available from the multiple listing service, the MLS. So in the MLS, with each listing, there's a little button off to the right, and I'll show that to you in just a second. When you click on the button, it looks like this. And what it says is these are the programs that might work. Now, it lists most of them, but it doesn't list all of them. That's why working with a lender that works with the majority is beneficial because they may know of another one or a different one. Here's what that button looks like. So in the MLS, this is an actual listing. You see this little dollar sign with a check mark. What happens is that your agent will be able to check or click on that, and that'll open up what you just saw a second ago, all of these programs. We can then page through here and we can say, oh yeah, Pete's going to utilize the MHFA program for you. Here's the criteria. Or, here's a program that we didn't know about. Let's see what those criteria are, and maybe you meet them, maybe you don't. But all of it is organized in one spot within the MLS. I don't believe Zillow has anything like that. This is something your agent could coordinate with you for you. Another spot, you can go to the Minnesota Home Ownership Center. You can look up their down payment assistance search engine. So it looks something like this. You drop in an address, you hit search, and up come the different programs. I'd mentioned that some of the cities offer programs. Here's one in Edina. So a lot of people think Edina is very expensive, and it actually is, but we do have townhouses and condos that aren't too expensive. So here's a program for the Edina Heroes. So the city of Edina said we'll give up to $100,000 in the form of a loan to help you buy a home of up to $600,000 as long as you work for one of the city type of employee jobs, such as police officers, fire departments, teachers, healthcare workers, and others who work in Edina city government. So they have $1 million allocated to this. When this $1 million is gone, they may or they may not reallocate any more to it. I'm not sure where they're at in that million, how much has already been committed, but this is an example of something that wouldn't come up in that MLS search, but is specific to a city. So let's say you're looking in Woodbury or would like to look in Woodbury. Pete has that program. That program, because it just came out and is specific, wouldn't show up in the MLS, but would be within Pete's purview because he keeps up on things, as well as myself. So this is the Edina program. They also have a program called Come Home to Edina. This program at present doesn't have enough money for funding, so it's temporarily suspended, but it will come back again. Their intention is once they have $2 million back in their kitty, they'll start lending again. And where they're going to get that money back from is people refinancing and selling their home or selling their home where they have a Edina Come Home loan. So this money has been recycled within the city of Edina for years, since the early 80s. This was when they came out with the program, and then it just keeps going back to help more and more people buy into the city. So don't just assume that a certain city doesn't offer something. Maybe they do. And down at the bottom of this slide, you see something about the first generation homebuyer program. In Edina, they have a $20,000 forgivable loan. Again, when they have money again, that will be forgiven for first-time homebuyers whose parents or themselves have never owned a home. That's called first generation. The city of St. Paul has something similar. Washington County has something. The city of Minneapolis and the state of Minnesota had programs. We believe they're going to have that again, but we don't have all the details yet. So stay tuned for that if you're a first generation homeowner. I had mentioned earlier that the Minnesota Housing Finance Agency has a couple of different programs. They have a $14,000 program and an $18,000 program. And I'll let Pete go over all of that with you individually. I'll just let you know that there are a couple programs that do exist out there. Again, the statewide program, Minnesota Housing Finance Agency, will work in any spot in Minnesota. So it could be Duluth, could be Rochester, could be Mankato, could be Marshall, could be Minneapolis. Doesn't matter. It's the state of Minnesota. They have pretty large income qualification guidelines. So this gives you an idea. You can make up to 185,700. Now that's for a family, and be eligible for this program. So you don't have to make 60 or 80% of the area median income. It's really pretty large. So some programs are limited to a lower percent below that. Some are above that. There's something called a land trust, for example. A land trust is where a nonprofit agency typically owns the house, sells it to you, they own the land, and then when you sell it, you have to sell it to somebody that meets the same lower income criteria. By removing the land from the equation, the home price becomes cheaper for you, but you're limited on your upside in that particular home. So land trusts are unique, might be a better option than renting if you're constrained based on income and you want more than you can qualify for. But you'll be limited on what you can do when it comes time for you to sell it. In terms of who you can sell it to, they have to be a certain income level, as well as your profit is limited. So a little bit about Nations Lending. Look at that guy. That's Pete. So if you want to take out your camera, take a snapshot.
Yeah. Okay.
And
Go ahead,
Pete,
Bert.
this is Pete. I'm going to kind of slide through this, Pete. You talk as I go, but this is Pete. And again, we work a la carte. So Pete and I would love to work with you together. Me as your agent, Pete as your lender. However, if you have another agent relationship, you can still work with Pete. No problem. Pete is agnostic. He works with everybody. So he wants everybody to be a homeowner, and that's his dedication. So take a picture of Pete's info. He would love to have a discussion at your convenience on how he can help you. This kind of goes over what used to exist. Now, these programs are out of money, but Pete and I did a number of these. I think we did 4 of them, where we worked with the first generation buyers last year that were eligible for the money that was given to first generation home buyers. You can see there are criteria. Some is forgiven in a shorter period of time than the other. There were 2 versions. They're out of money at present, but a new iteration of this will be coming. Pete has his finger on the pulse and knows and has an idea of when the money will be released. It's not available yet, but he can go over that with you. And if there are any first generation buyers, we might want to set up your search in the communities or areas where this money could be utilized. We could certainly look at all areas, but if you're looking to get a lot of free money or forgivable money, I should say, um, this if and when it comes back and if it looks something like this might be really attractive to you. A little bit more about nations. They're licensed in all 50 states. So if you're watching this and you're not in Minnesota and you'd like Pete to be able to help you, he could refer you to another loan officer in another state, or he may be able to do that loan in another state. Nation services most of their loans, as you can see. So when you get your loan with them, you're not going to be sold. You're going to continue to make your payments to them. They have just a little number, like $11 billion in home loans and counting, and they do a wonderful job. They also are one of the few brokers that will do full underwrites. So remember we talked about underwriting and pre-approval. Pete can get your file in front of an underwriter. A lot of brokers, because it costs money to get in front of an underwriter, can't or won't. Pete and Nations will. This kind of goes over some of their products. Again, they have everything that's out there for you, the regular bread and butter, plus a lot of special programs. And off to the right, you see he does the right in the bottom, he does renovation loans as well. So maybe you have this house that you would love to buy that's scratch and dent, meaning it's not quite the way you want it. You don't have the money for the improvements. You'd love to buy it because it's in the area that you want, but you just can't do it because of the bathroom or the kitchen, or it needs some other thing like the furnace or other things improved. A renovation loan might be the ticket. So Pete is one of the few lenders that's willing to go ahead and do those types of loans. So types of mortgages, conventional mortgages, everybody is eligible. FHA, everybody is eligible. VA is only for veterans. So if you're not a veteran, you can't get a VA loan. Underwriting guidelines vary per lender. And then sometimes lenders put overlays. So Pete mentioned FHA earlier, and he mentioned a number of 580. Other lenders won't go down to 580. They're like, nope, 640 or 620 or whatever their overlay is. So if you have a little lighter credit score and you want home ownership sooner rather than later, you need to work with a broker or bank or a lender of your choice that would do the loan with the lower scores. And again, a lot of the bigger banks typically have an overlay with a higher credit score. The brokers have different investors that they can place loans with, so they have more options of where they can place that loan and more flexibility with a lower credit score.
No, I'm going to add something, John.
Sure.
So we will, okay, go all the way down to 500 on FHA loans once we get an approval. But keep in mind, if it's you have under 580, you have to have 10% down. So
Beautiful. That's very rare. I got to tell everybody on the call that is very rare. So most lenders have much higher credit scores that they would even consider. So if home ownership is something you want to do and not wait, it takes, depending on where your score is, it might take a couple years, depending on how active you are in improving your score to get that up to a higher number. The good news is that we can get it up. The bad news is that it does take some time and effort on your part to establish new credit and credit that's positive that reports so that you can be reevaluated. But don't let a bump in the road hold you back. So some of you may have been foreclosed, you had a short sale, you had a bankruptcy, you had a charge off, you had a repo. I get it. Life happens. But those things can be overcome if you're willing to do the next steps. And that's where that loan counseling comes in, because that's where Pete can sit down and say, these are the things that you need to do. If you do them within X amount of time, your score can increase. And therefore, we can be proactive about getting you into home ownership. There are also alternative loans I mentioned called non-QM loans, non-qualified mortgages. These are perfect for people that are self-employed or have a lot of assets but don't necessarily report a lot of income, or people that run things through their bank statements, lots of deposits, but they maybe don't report because of deductions. They don't report it all on their income taxes as income. So bank statements can be used as an alternative. I-10 loans, if you're maybe from another country and you don't have all of your citizenship here yet, but you have an I-10 number, you can get an I-10 loan. That'll also help you buy a house. Rental property can stand alone and qualify based on the cash flow, and that's called a debt service coverage loan. Reverse mortgages are for people that are 62 years old or older, and it can be in the form of a straight up loan or it can be a line of credit. So lots of flexibility there. And then we have portfolio loans where lenders make up their own rules, and then we have to sell the loan and do the mortgage according to what their rules are. But normally that means more flexibility. And then land trust, I referenced that. That's for somebody with generally a lower than the area median income and that wants to buy a house but just can't qualify because their income might be too low. They can still possibly get into a home through a land trust loan, but they're not going to own the land and they're going to have restrictions on what they can do with that property in the future. A conventional loan is offered by a quasi-government entity. So it's called the government-sponsored enterprise. That's what Fannie Mae and Freddie Mac are. The lenders like Pete and the banks create mortgages and then they sell them according to the guidelines back to Fannie and Freddie, and then they do it again. So they are perpetually creating mortgages according to the guidelines and selling them. And that's how they make their money, is both on the servicing side and in the creation side of those loans. FHA is a government insured loan. If you've ever seen a HUD home, that's the same as a home that once had an FHA loan that was foreclosed upon. FHA loans require mortgage insurance. And that's good because lenders wouldn't make the loan at a 3.5% down payment if they didn't know there was a backstop in the event of a loss. So the mortgage insurance that you pay, it's called MIP, that protects the lender for a certain amount of a loss in the event of a foreclosure. So the lender can turn it back after they foreclose for reimbursement on their loss. The same thing with a conventional loan. When you don't put down 20%, what happens is you're going to need mortgage insurance. It's called PMI. That PMI serves the same purpose. It insures the loan for the lender against a loss based on your default. Well, hopefully there never will be a loss, but if there is, then they can turn it back for, again, reimbursement. So the benefits of FHA loans in general is that they have a low down payment and they have lower credit scores. Here we see that many banks cap it at 640, some do 580, and as referenced by Pete and on this slide, nations can do it down to as low as 500 with extenuating circumstances, meaning if you have a problem that you visit the casino frequently and you get yourself in trouble, that's one thing, meaning the answer is probably going to be no. On the other hand, if it was due to improper insurance, meaning health insurance, and you had a medical situation and now you have charge-offs or other bills associated with it that have affected your credit, that makes sense, meaning you had to pay, you had to live while you were sick or whatever you were going through. So it depends on the reason why you happen to have the bump in the road, the credit blemish, if you will. If it makes sense, and if you've gotten beyond the reason for why it occurred, then you might be loan eligible. At least in the future, you sure will be. But the timeline depends on where your score is today and the cause of why your credit dropped in the first place. FHA, they charge approximately the same across the board for their mortgage insurance, whereas conventional loans PMI is charged according to your credit score. So it might be more expensive if you have a lesser credit score to utilize a conventional loan than it would be to use an FHA loan. With FHA2, the seller can pay up to 6% in closing costs. Now, I'm not saying they're going to pay up to 6%, but they're allowed to. Conventional, it's going to be 3%. Under VA, it's going to be 4%. So depending on the loan type, depending on what you might need or want to ask for in your purchase, depends again on the type of loan that you might use. And that again goes back to the loan counseling. When you sit down and you get counseled appropriately, you know what you've got for assets and income to work with, then Pete might suggest you go, for example, FHA over conventional, depending on what your situation is. Normally, the lenders allow between a 40 and 50% debt ratio, meaning they allow 40 to 50% of your income to be utilized towards a house payment and debt. And if you have student loans, you may need to put them in repayment or redo them in order to get a lower payment. So Pete can review that, of course, with you. Um, I would suggest that you look at initially a 30-year loan, although we do loans of all different lengths, 15, 20, 25, and 30. But if you start with a 30, you can always add extra to principal and reduce that mortgage to whatever amortization schedule you want. So you can lower the cost, increase the cost by adding extra to the principal and shorten the term. So start with a 30, in my opinion, and then pay it at whatever level you want to bring it down to a different amortization schedule. Down payment assistance programs and grants work with most of them work with FHA loans. FHA versus conventional, here's just kind of a side by side. FHA requires a 3.5% minimum down payment. Conventional, you can buy with as little as 3. Credit scores as little as 500 FHA, generally a little higher with conventional. Depends on the program and the lender. Maximum debt ratio, they're generally both going to be between 40 and 50. The better your credit score, the more assets you have, the longer you've been on the job. Those things allow you to push the ratio higher. For 2026, the FHA max loan limit in the Twin Cities is 541. For conventional, it's 832. So that could be why you pivot from one to the other. If you're looking for a home and the price is over 541,000, we're going to want to utilize a conventional loan.
Hey, John,
Yes, Pete.
I just want to let you know, I don't know, I have not run into one of these yet, but supposedly, this is new from, within the last month anyways.
Sure.
Um, Fannie Mae supposedly we got rid of their 620 credit score minimum,
Okay.
as long as, it approves through AUS. It doesn't matter what the credit score is anymore, apparently. But I'm
Beautiful.
not, bad to use it, you know. So,
So what Pete's saying there is if he's able to get the computer to approve it, because he puts everything in when you make an application, and he pushes the button for pre-approval, which would then be later reviewed by the underwriter. But if he puts that in and they get an approval and your score is below 620, then that's a sellable loan and they'll do that loan.
but I
So
was told you have to put 20% down.
you got to put 20% down to do that?
Yep, yep.
Okay, fantastic. I just noticed a couple questions, Pete. They wanted to know if Chaska or Shakopee have programs that you're aware of, or Scott County.
Yep, I did answer that. It looks like I think
Oh, yes,
as
you
of
did.
January 1st, Scott County has a $5,000 grant. As long as a household of two, you don't make more than 132,000, and household of two or more, or three or more, I think it's like 155 or something like that.
Beautiful.
And then I think it's still funded, but but that was as of uh well, January 1st, because I know last year it was 8,000, but look like they reduced it down to five.
Okay, awesome. Thank you, Pete.
Yep.
So, yep, Pete knows his stuff, and if he doesn't know it, he'll research it. So that's the beautiful thing. He wants to make it work. With regards to down payment, minimum out of pocket, depends on the program. Can be a gift or special funds. You might be able to take a loan from your 401k. You might be able to get a gift. So there's all sorts of ways to put this together. First-time buyers often lack the money, so where are they going to get it? Well, that's the beauty of the down payment assistance programs and the grants. So the loans and the grants that are out there bridge the money that you need for the down payment and the closing costs. Other places we can look to money, gifts from parents or relatives or significant others, possibly take a 401k loan if you have a 401k, You're allowed to take under most 401k rules the lesser of 50% or $50,000. Now, you may have to send in the purchase agreement, and it might have to be your primary home in order for them to approve it. I did have that happen, but some of them just say if you're gonna take a loan, you're eligible for 50%, and that's just the way it is. So with less criteria. So it depends on your custodian. If you have a 401k, you're going to want to reach out to them and find out their guidelines for making a distribution. Another thing is if you have an IRA, you can take $10,000 out without a penalty, meaning if you're under age 59 and a half, you would have had a 10% penalty. So that goes away, but you will have to claim that income, that 10,000, as income in your income tax. And then the seller could pay your closing costs. So the offer that I made for the buyers this morning that I was out with that I referenced, we asked for $5,000 in closing costs. Now, I don't know if we're going to get that, but we asked for it. We're not in a multiple offer, so we have that flexibility. We'll see what the seller says. But sometimes the sellers will pay, sometimes they won't pay. In the particular home I'm referencing for the offer that I wrote, that home has been on 24 days. They did have a price reduction, but they may be a little more motivated being that it's had a little bit of market time, meaning people have been through it, they've had some feedback, and they realize now they may need to be a little more flexible. So that's where we're starting on that particular home. We'll see how it goes. What you can't use for a down payment is borrowed money in any form. You can't go down to your local bank and say, I want to cash advance this credit card, and then go on over and see Pete and say, here's my down payment. I just took it out from Mr. Visa. Nope, that's not going to work. Um, Loans in the form of loans won't work unless they're from a lender or down payment assistance program. So you can't go take a loan at the bank, just like a personal loan, and use that for your down payment. It has to
Can
be.
I add something?
Yes, Pete.
Okay, so um, if you have a secured asset like a car, like a cars that have been paid off, you can do a car loan and secure it, with the car or a boat or a motorcycle or something like that. You can use that money for down payment as long as it's secured.
Perfect. Thank you for clarifying that. Yes, and some people do have free and clear cars, and that might be the $5,000 that you take out in the form of a loan to use for your down payment. Thank you for adding that, Pete. And the last button here is undocumented cash. So if you work in an industry, like let's say you work in the service industry and you get tips, um, and maybe you keep that cash around the house and you want to use that to buy a house, you're going to need to introduce that into the banking system a minimum of 2 months prior to making the application so that it can show up in your bank statements because Pete's going to want 2 months of bank statements from you. And so if you get it in 3 months ahead of time, then that'll be great. If you get it in during that 2 month period, then you're going to have to write a letter, and mattress cash, generally speaking, doesn't work, meaning they want to know where that cash came from if it's within that couple month time frame. So this is again where some pre-planning comes in, and that you need to put the money in the bank, get it seasoned, if you will, so that it's available. You don't get to show up at a closing with a briefcase of cash. Those days from Miami Vice are long over. So today they're concerned about money laundering, and that's why everything needs to be documented.
John, I'm going to add a couple of things to that part.
Okay.
If it's a smaller amount of money, like a couple $1,000s, and if you're a waiter, waitress, you have a job where you normally get tips,
Mm-hmm.
I can probably get an underwriter to, you know, accept that. Okay.
Okay.
I've also had someone that got married recently, and they got a bunch of cash for gifts, and the underwriter asked for a copy of the invitation and all, that stuff, the marriage certificate, and you know,
Mm-hmm.
and we were able to use the cash that they got from the people that went to the wedding for gifts.
Oh, how creative.
Yep.
And you didn't have
So,
to provide all the canceled checks or copies thereof.
yes. So as long as there was a
Okay.
letter, we could prove, there was an invitation, there was a banquet, and all that stuff, and you know,
That's awesome.
okay.
Thank you, Pete.
Yep.
Another creative idea from Pete. Buyer eligibility. It's based on your ability to repay, your willingness, and the collateral. So let's break those down. Your ability is your income. So You might make enough money to take out $1 million loan, but you're not going to get that $1 million loan if you only make enough to afford a $400,000 loan. So you have to have the income that justifies the loan that you want to take out. Your willingness to repay is based on your credit history. So the past is a good predictor of the future in the sense that if you paid everybody else on time, you're probably going to pay the bank on time. If you'd never paid anybody on time, why is that going to change when you get a car loan or a home loan? So your credit score reflects your willingness to repay. And then the collateral is the home itself. So we talked earlier about the appraisal of the home. The home has to be satisfactory for the lender to want to lend the money against it. If it has issues, or if it's not worth what you've agreed to pay, then they won't. They'll only approve the home loan based on what the home is worth and if the home is in decent shape. Now, if there is something that's broken, they may call that out as what's called a work order. And they'll say, well, we'll lend on that house once you fix this, whatever this is. It could be the roof, could be the functionality of the windows, it could be scraping and painting the interior, exterior where there's lead-based paint. So it all depends on the loan and the program, but if the home is in fairly good condition, it normally passes. FHA and VA are a little more picky than conventional. So let's open it up to Q&A. If you have anything for me, you can type it in the chat or unmute yourself and ask the question. Both myself and Pete are available, and when questions are done, I'll move on in this presentation. And if there aren't any questions,
A
I'll just keep
question,
going.
do I just ask?
Yep, go ahead and just ask your question.
I'm wondering, I guess my question is more for Pete.
Sure.
Okay.
Um, my situation's a bit unusual. I would be a first-time home buyer, but the only reason I'm able to purchase a home is because my parents died, so I will actually have a large down payment, but I will only need like a little baby mortgage. But is there any sort of first-time home buyer's assistance for somebody in my situation?
There could be. It all depends on your income. Probably best thing to do is, I don't want to, go over everything here, but if you want to call me, or I can reach out to you
Okay.
and, get more details. There possibly could be. Um, but like I said, a lot of them do have, a lot of programs, a lot of the cities, not all, okay, have asset, limits. So like in your case, you can inherit a bunch of assets. So they figure, you don't need the help. So, but there's not always, depending. I know there's some Minneapolis, there's some um, neighborhood programs. Okay, they're trying to, you know, get a wider range of people moving there. So they remove those, and you can still get grants. Depending on the neighborhood in Minneapolis, there may be something available.
Okay, thank you. I will reach
Oh,
out to you
okay.
because I do not earn enough income. My income is very low. Prior to
Okay,
my parents passing away, I was considered low income. So yeah, I'll give you a call.
okay, okay.
And, and I'm just thinking that there might be a way around that too. If you haven't inherited the money yet, maybe if there's a sibling or something that's going to inherit as well, maybe they could give you a gift. You could qualify as you are today, and then after you receive your inheritance, then you can return the money. But anyway, I'll let you and Pete figure that part out. There are a couple of questions that came up here too. Have either of you ever worked with the Muslim populations that are restricted to access for the loan due to interest? And the answer is yes. There's a company that I work with. It's called Guidance Financial. It's one of a couple that does the halal versus haram loans and doesn't allow for riba. So that's about all I know as far as my words, but I'll tell everybody what that is. So halal is good, haram is bad, and riba is interest. So um, our Muslim friends that want to obtain financing on a house and adhere to what their religion allows them to do. They're not allowed to pay riba, i.e. interest. So they have to have a loan that's halal, that's good. versus Harim, that's bad. And so Guidance Financial is one of the lenders that I work with for those specific folks, and we can get you pre-approved with them. The loan is actually underwritten by Freddie Mac. So that's where they get their money. But the loan is not a conventional traditional loan. It's a loan that the the clerics have reviewed and approved, and it meets their religious definition. It also has some interesting components with regards to foreclosure protection and things like that. So the answer is yes. Don't let that hold you back at all with regards to buying a house. We'll just direct you to a different lender for that specific product if that's what you need. There are also things with Habitat for Humanity and some of the other lenders that are out there that have something close. Um, I've worked with some folks in the Muslim population that decided that it was that they would go and not get a Muslim financing approved loan and get regular financing um, because they felt the payment was less. But if that's something that you don't want to do and you want to adhere to what your religion allows for, the answer is absolutely there are programs that we can utilize. Uh, Question from Melissa, is there a fee to work with me and Pete? So we get paid, but how we get paid is through the process, meaning if you are successful in purchasing a home with me as your agent, there will be an admin fee of $650. In addition, there's the broker compensation in your broker compensation form. What I use in my form is 2.7%. Other agents might have it higher, they might have it lower. Other companies might have an admin fee that's higher, it might be slightly lower, but we're all effectively paid the same way in the sense that we have to fill out a buyer representation form explaining the compensation. That was what I showed early on in the PowerPoint. And then that compensation beyond the 650 is asked for in the purchase agreement from the seller to be paid on your behalf. So the fee to work with us, to talk to us, is zero. So you can have a conversation. We are both happy to dig into and explain all of the costs and the procedure. So free to talk. If we go forward and you utilize one of our services, there will be various fees. And then if it's unclear, if I'm not explaining it, I'm more than happy to dig deeper into that with you, offline. But Pete and I both do get paid in the process. He has his origination fee that is accompanying the mortgage costs, and that is part of your closing costs. So Pete's
Yeah,
fee.
yep, yep. I'll add to that. No, so for example, if you do use like Minnesota Housing, okay, their program, how it works is no matter we use me, use another lender that participates in the program, you're going to pay the same interest rate because Minnesota Housing sets the rates for their program. So how our company is compensated is when we turn the loan over to um, Minnesota Housing, okay. Well, actually, Minnesota Housing uses U.S. Bank as the master servicer. So we'll turn over to U.S. Bank and then they pay us a little bit of money, okay. And that's how I get compensated off of that. Um, so that's how that works. Okay. So depending on the program, the but if you do it like a regular Fannie Mae, Freddie Mac, FHA loan, then I get compensated, when we sell the loan to Fannie Mae and Freddie Mac, or and they pay us a little bit extra, and that's how I get paid through my company.
Yep, and everything is full disclosure. So we kill lots of trees in the process of you buying a house. So there's lots of paperwork, lots of disclosures. Everything is 100% transparent, and we're more than happy to review everything and anything so that you are 100% informed. Um, with regards to a question here, do you have to be a U.S. citizen? No, you can have an I-10 loan or you can be a foreign national. Uh, there might be a larger down payment associated with those loans where you're not a U.S. citizen, but no, you do not have to be a U.S. citizen to qualify for a loan. And that's one of the advantages again of Pete is that he has access to those programs. A lot of the banks and credit unions especially don't, meaning they don't offer that. So if you
Yeah,
are a
yeah,
non-US
yeah.
citizen, go ahead, Pete, were you going to say
Okay,
something?
yeah, no, yeah, no. In my previous life, I worked for Wells Fargo. Okay, so I know none of the big banks, Wells Fargo, U.S. Bank, you know, Chase, whatever, are going to have any of these,
Mm-mm.
I-10 or, you know,
Or national or
before
nothing.
national type loans. Okay, they just
No.
do the cookie cutter, you know, Fannie and Freddie and VA, FHA loans. Matter of fact, Wells Fargo doesn't even do the municipal housing loans.
Yep.
So,
Yep. So yeah, I always say, let's have a conversation. If you want to buy a house, I want to help you buy that house. Pete wants to help you finance that house. Both of us are resources. Again, I've been doing this over 40 years, Pete over 20, and we're going to direct you in the right direction. So, like for example, the question about um, the Islamic financing. If Pete can't do that loan, he's going to say, but I know a guy that does. I know a program that does. So his goal is to help you even if he can't. And my goal is as well. I again would like to be your agent. Pete would like to be your lender or a la carte, but our goal is to increase home ownership, period. Um, question came up. Do you know of any programs available to all minorities, such as Hispanics? I am aware of specific programs for the Black population. I'm not aware of anything for the Hispanic population specifically, but Pete might. Pete, are you aware of anything for?
I'm not heard anything, through for Hispanics specifically, but I agree with John that there are programs um geared towards uh you know African American or and I don't know if it's still available. I know Build Wealth in Minnesota had a program for uh people of color, they called it. Okay. So I think Hispanics would probably fall into that category, but last I checked, they did not have any money because the money came from a private source. So someone donated the money to them, and then they were out.
Yeah, when I talk to Habitat for Humanity, they have a specific loan that's just for the black population. So it's one of their loans, and that's what their goal is to increase home ownership. And I think they call it the Black Home Ownership Home Loan, but that's a specific loan through Habitat that's available. So yeah, there are those programs that are out there. Um, Sometimes for one group, sometimes for everybody, sometimes it just depends. So
Yeah, I was told that, no, depending on the funding, usually the government funded programs, they can't, put restrictions like that on there. But if the money comes from a private individual, they can put whatever
mhm,
restrictions they want on it. So,
sure. Okay. Well, fantastic. Then I'm going to keep going. We're going to have another break in a little bit, and then we'll have a break at the end. So I'm going to continue to go through, get those questions ready, and we'll address them at the next break. Mistake number two is not getting pre-approved before you view homes. So remember we talked about what it takes to get a mortgage? It's going to be your credit, your income, and your down payment. And then to get pre-qualified, you're going to have to fill out a loan application, and they're going to review your credit. You're going to upload and provide documentation of your income through pay stubs and your assets through bank statements or investment account statements. The lender will help you qualify and determine what you can qualify for. You may not want to spend again all that you are qualified for. We're going to find whatever works for you and your budget. But getting that letter in place is essential because it means that when you find that house that you could actually make an offer. In a fast market like the spring market is, if you don't have that letter, if you go look at a house and then you come back and you say, well, now I need to get approved, it's too late. That home, if it's a good home priced right, will probably have multiple offers. Normally, we need to react within a 24 to 48-hour period on a hot house. And it might take longer than that for you to get pre-approved. That's why I like to take the first 2 or 3 weeks of your home buying process, set up a preliminary search online have you work with the lender to get your pre-approval letter in place. Once that's in place, then we actually go out and view homes. But I don't show homes until a letter is in place. Or if you're paying cash, if you have a bank statement and you have the cash or the asset statement and in your portfolio, then we can go. But if we're not paying cash, we need that letter. Uh, Simple steps for getting pre-approved. Call for questions, discuss your situation, continue to live as you are, meaning don't make any big changes. Big changes would be buying things that are unusual, that are large, like a new car, or taking on a big loan, large debt. We want everything to remain status quo during your home shopping process through the closing. The minute the closing happens and your loan funds, feel free to do whatever you want. Go rack up that credit card, go get new furniture, buy a house, buy a car, buy a boat, do whatever you want. But don't do it while we're looking and before we've closed. A loan is going to be underwritten based on the way you are today. And if you change something during that process, then it needs to be re-underwritten. And you might disqualify yourself because remember, you qualify based on a debt ratio. If you take on more debt, your ratio will get worse, which means your ability to qualify will be less. So be very careful during the approval process that you don't do anything different than you did when you initially made your application. And that can include making a job change and certainly a career change. So if you move from being a nurse to being an insurance salesman, for example, you went from a stable job to uncertain income. Um, Lenders don't like uncertainty. They want stability. They want longevity. So if you can stay on your job in your career until we close, you'll have a much better outcome than if you make a change. If you make a change in the middle, you might not qualify anymore, especially if it's to self-employment. Underwritten loans are the way we want to go, which means everything's been reviewed. What Pete does is he is a good lender in the sense that he will pick up the phone and call the listing agent and advocate for you and answer any of that lender's questions. So if I'm a listing agent representing my seller, I want to know before we take the home off the market that you have the ability to complete the transaction. So I want to know that you've already been vetted, and that's what Pete does. He will review everything, and if necessary, get it in front of an underwriter for specific questions, and then run the approval and take it to an underwriter. So that's what he's able to do. So we eliminate all problems up front. Depending on how fast you can fill out the application and provide the data, depends on how fast the approval will be. So if you can do it all in a weekend, then he can get right on it. But he has to stop and start based on how fast you input the data. So it's you're kind of driving the bus in the sense that if you don't do it, he can't do it. So
I'm going to add something, generally, it takes, once I got a complete application with all the documents, takes 2 or 3 business days to get it in front of an underwriter. The one thing that takes a little bit longer sometimes is the verification of employment. We verified income, through your employer. A lot of major employers will do it automatically, and that comes back very quickly, usually within a couple of hours. But if you've got a smaller employer where they have to hand fill out the verification of employment, it could take 2 or 3 days, a week, depending on, so that's where it would be the delay in getting it reviewed by the underwriter, is the verification of employment.
perfect. Thank you, Pete. So if you're pre-approved or pre-underwritten and pre-approved, you can shop with confidence because you know you can buy. You just have to find the right house. Your search criteria can be tweaked according to that letter. And as far as a seller looking at your offer, unless you're a cash buyer with proof of funds of that cash or assets, they won't look at your offer. So if we didn't have a letter and we wrote an offer and sent it over to a seller, they're going to go, what's that about? How do I even know that you can even do this? I'm not going to even negotiate with you. Come back when you have your pre-approval letter. So It's just a function of the process and one that we have to do in advance. Mistake number 3 is using the wrong lender. Okay, so not all banks work with or are approved to use down payment assistance programs. I had a buyer that bought a couple years ago, and she was loyal to her credit union to a fault. She didn't have the money saved for her down payment, but she wanted to use her credit union because she'd always banked there. That particular credit union was not approved to do any of the down payment assistance loans, which means she had to wait until she accumulated 3% for the down payment. In the course of that year, because this was around 2020, in the course of that year, homes went up 10%, which means on a $300,000 home, which is what we're looking at, that home, when she was able to save after a year, cost her $330,000. On the other hand, if she had utilized the Minnesota Housing Finance Agency program that allows for $1,000 down, we could have bought immediately. So I made her aware of the program. I made her aware of a lender that could do that, and she chose to wait, which was fine. We're going to always work on your timeline. However, by waiting in an appreciating market, and in that particular very hot appreciating market, it cost her an extra $30,000. So that's why using the right lender is important, because the wrong lender can be very expensive. Smaller banks and smaller institutions have limited products. Larger banks and larger brokers have access to more products. Small banks may not offer down payment assistance program and be told under that example that I gave you that you have to wait another year until you've saved enough. When I tell people that you can buy a home with $1,000, and Pete gave you an example of where a woman only used $250, they're like, what? I didn't know you could do that. I thought I had to have 20% down. So hopefully when you get off this call today, you will be 100% confident and know that you don't need to put 20% down. It can be as little as 3 or 3.5, and with utilizing down payment assistance, it can be very little, depending on the city and the program that you would use. So it's a big balancing act. That's why you have to pick the right people to work with. The average person will buy no more than 3 to 5 homes in their lifetime. Because you do it so seldom and there's large gaps in between, it can be 10, 20 years, things change. So it's not something that you're doing daily, and it is complicated. So working with the right professionals is inherently important. Now, it doesn't have to be me, although I would like it to be. And it doesn't have to be Pete, and Pete would like it to be. But you need to find competent people, and people that I think have been around for at least 10 years, so that they can share information and point you in the right direction. Think of us as your financial quarterbacks again, to help be your guide. Is a 30-year fixed mortgage always best? Not necessarily, but it does give you the flexibility of paying and reducing the principal and changing the amortization schedule. ARMs, an adjustable rate mortgage, might be something that you'll entertain. For myself personally, I'm very comfortable with ARMs. I currently have them and have used them almost exclusively. An adjustable rate mortgage means that the rate will adjust after a period of time. Right now, you can get a 5-year, 7-year, or 10-year adjustable rate mortgage, where the rate is fixed for either that 5, 7, 10 years, and then goes up or down, generally over a 6-month time adjustment for the balance of the number of years of that 30-year loan. So an ARM means that you're sharing the risk with the lender after that fixed period, and then the rate can go up or it can go down. So if you're open to that rate adjustment, then an ARM might save you some initial interest up front. It's a great product to pair with a limited amount of ownership, meaning, let's say you told me, John, I'm moving to Florida in 5 years or 7 years or 10 years. Then when we looked at the rates, you might get a better deal matching your length of what you believe will be your home ownership with a ARM, because your rate might be cheaper. So the rates, of course, are depending and change every day. That's something to discuss with your lender. Sometimes the ARMs are priced out of the market. Sometimes they're priced in the market. So it's just another thing to discuss and see if there's any applicability to your situation. I had mentioned renovation loans, and I mentioned that Pete does them. He does conventional and FHA rehab loans. And again, scratch and dent, you might find the perfect property, just needs to be updated, and you won't buy it unless you could redo that kitchen or bathroom. This might be the ticket. So again, Pete can review those types of programs with you and how it might apply.
I'm going to add something back to arms.
Sure.
Right now, it seems like the sweet spot of arms is 7 or 10 years, which is a long time.
Hmm.
So, so if you don't plan to, if it's going to be a starter home or something like that, you may want to consider a 7 or 10 year arm. However, there are a lot of the down payment assistance programs do not allow arms, so you've got that to worry about. But right
Good
now,
point.
you can get about 0.5% lower, depending on the day, on a 7 year arm versus a 30-year fix, which it could mean quite a bit of money in payment wise. So,
Sure. Awesome. Thank you, Pete.
yep.
Mistake number 4, buying directly from a builder without realtor representation. So when we set up your search for you, we set it up and it shows all of the available properties, including the ones that are being built by the large builders. So I'll mention a few names. You may have heard of M&I, Lennar, Pulte, D.R. Horton. All of those builders work through the MLS. What they allow us to do is show you their properties, and then they pay us when you buy. Doesn't cost you any more to have realtor representation. Now, when you walk into a new construction lender or a builder, I'm sorry, you walk into a new construction builder and the agent that's in that house, do you think they're representing you or are they representing the builder? Well, they're representing the builder. So I think you need representation because what we're able to do is help you make the comparison between the builders, help you evaluate the floor plans, and maybe other things that are things you haven't thought about, like the location within the complex, the lot, and those things. The builder rep is there to represent the builder. As an agent, if I'm with you, I'm there to represent you. There is no cost differential. But the key thing is that the builders want us to register you. So let's say you say, John, I want to look at new construction in Rosemount. Fantastic. Let's go. Don't go there by yourself on the weekend. Instead, let me accompany you there and register you. That's what the builders want, is they want to know that we had the initial contact and brought you there. They don't want us to show up after you've decided to buy the home and go, hey, well, I was working with them. They want to go, no, you brought them over here. You showed it the house. And, it was from your MLS drip that they found the property. And you were here at the initial time to do that. So that's the way that it should work. That's the best way. And that's how they want the flow to go. Truth about buying directly from a builder. Sometimes, especially if it's competitive, they may offer you some specials. They may offer you, if you work with their lender and title company, maybe a finished basement, maybe a fireplace, something to that effect. Now, sometimes they work with down payment assistance. Sometimes, most of the time, the national lender builders don't. So if you're intending to use down payment assistance to purchase new construction using Pete or somebody that does down payment assistance, might be the only way that deal gets done. The builders offer sometimes better rates only under certain programs, meaning traditional regular down payment, conventional or FHA products. But if you're using down payment assistance, they almost always are not on the approved list, which is why you need to bring in your own private lender. It does mean you will forego their specials and their incentives if they offer one for using their lender, but it might be the only way you're going to buy that house. So Pete knows that, and as do all the other lenders, that they're always competing with the builder mortgage companies. And to that extent, he will tell you if it's a better deal to go with them. But if you're using down payment assistance, he may be the only way that you're going to buy that new construction home. He and I did a transaction with the first generation buyer down in Rosemont, and he got that buyer $32,000 to use to buy that house. and that 32,000 was forgivable over 5 years. The only way that deal got done is with Pete doing the down payment assistance first generation program because that builder and that builder's lender did not have access to it. So that's just an example of where Pete was able to do that. Mistake number 5, skipping a home inspection, when it might make sense and when it might not. Okay, here is one company that I recommend. I have no, dog in the show or whatever, but they have done lots and lots of inspections all throughout the Twin Cities. You can Google them, look them up online. They've got a bunch of 5-star reviews, I think over 1,000. They do a nice job and can coordinate all of the different inspections that you might want to hire out. They do all 5. So the radon, the sewer scope, the chimney, the mold, in addition to the regular, baseline home inspection. So they do all of that. Not all inspection companies can coordinate all of that. The other thing is in Minnesota, there is no licensing requirement for a home inspector. So your parent's best friend could be laid off from their corporate job and decide to be a home inspector. They probably don't have the experience as a company that's done thousands of inspections. So I would say it doesn't have to be Heartland. It could be Pillar to Post. It can be Structure Tech. It can be any number of other companies. But utilize a company that's done a few of them, like a lot of them, because the advice that you're going to get and you're going to rely upon is going to be better from somebody that's done more of them and that is familiar with it. Somebody that just decided to be a home inspector and printed a business card, isn't going to give you the same experience. It might give you erroneous information. So I'll never tell you to skip a home inspection. However, a home inspection does create a contingency. So in a multiple offer, if you make an offer with an inspection and the other one that you're competing with does not, they're likely to take the one that does not, if all things are relatively equal, because if there is no home inspection, that means if that seller accepts that offer, that the deal's done. On the other hand, if they do accept it with an inspection, you could walk away, or you could come back and ask for the moon, and then the deal falls apart. So it just depends. I think an inspection is very valuable, especially for older homes. I think you'll get a lot of value out of that. For a newer built home, I don't know that it's as important. Either way, it's always your call, and I'll never tell you not to do it, but I think you need to understand how it's perceived in the sense of how a seller looks at it, especially in a multiple offer. The risk of skipping a home inspection is that you're going to be unaware of money bombs or deal breakers until after you own it. And there is no recourse because you could have had a home inspection and you chose not to. You basically took the home in as-is condition. So you lose your negotiation power if there's a later problem. You could inherit something structural. That's a major problem. A big thing on old homes that are, let's say, 100 plus years old, especially with big trees in the front yard, they might have a bad sewer line. So I always recommend you consider having a sewer line inspection with an older property, because to dig up a new sewer line, depending on the length from the home to the street, could be $20,000 or more or less, but it's an expensive repair. So for a few $100s, I think that might be a good thing to check. Also, if you have a home inspection, you don't have to have everything fixed from it, but at least you've identified the issues that you might later need to address. There might be some code violations. I can guarantee you on 100-year homes that there are code violations regarding older homes. But it doesn't mean that the seller needs to bring them up to current code. But you'll know if you're going through, let's say, a home inspector, that they can point out things like knob and tube, which is a form of electrical that might be hazardous, that exists with older houses that you're not going to find in a newer house. So you've heard the word caveat emptor, buyer beware. You have limited recourse after closing. So address your issues during the process so that you can work through them or accept them and forever hold your peace type of thing. Mistake number 6 is skipping the condo document review. Minnesota law allows for you to review the rules, the regulations, the bylaws, the resale disclosure certificate, and all financials, and you have 10 days from receipt of them to decide if you want to go forward. I have a link to the Attorney General's website. At that website, you can go there and download the document that goes over the 10-day rule. Now, that 10-day rule could be shortened by mutual agreement to 3 days. The reason you might do that is you might be a quick read. You might be like, yeah, I don't need 10 days. I can knock it out in 3. And you might do that as an accommodation to a seller. The reason being is that if you wait the full 10 days, the seller essentially has a 10-day contingency. Because you can back out at any time for any reason within that 10-day timeline, the seller can't go forward and buy another home non-contingent. They could only buy a home contingent on your 10-day timeline expiring. So they may say, hey, you know what? Can you do me a favor? Shorten it to 3 days. Then I can go forward and I don't have to be out of the housing market on my next purchase for the full 10 days. So you might agree to that. Here's what the document looks like, and here's where you can find it. Again, it's under publications at the Attorney General's website. It's about 4 pages. Here's what the MLS search looks like. So we go on here. After I've entered you into our system, we identify the criteria based on minimums, and based on the areas, and then we start the search. I have a lot of resources. If you were meeting me in person, I would give you this book. You can get it, though, also online and read it as a flip book. So here is the web address. And if we do meet in person, I'll bring you the book. Here are the table of contents and the chapters. A lot of valuable information that's in addition to this PowerPoint that we're going through. And I have kind of a comparison between buying and renting, building the case for wealth and through home ownership. So we have that, another publication. Then I have a bunch of other books. So you're here for the buyer class, but you may have friends or family members that want to sell a house or downsize. I help everybody with their real estate needs, whether it's buying, selling, or investing. So for one of those other folks, or if you have interest in other areas, I have other books and other resources for them. I have a YouTube channel as well, where I interview people that are related directly or ancillarily to the home buying process. So that would be lenders, movers, attorneys, all different people. So if you went out to YouTube to my channel, you'd be able to watch classes for free, of course. And this class here will be uploaded later, probably tomorrow, into YouTube and will be a resource. I will be sending this link out if I have your email so that you can watch it and share it as well. So hopefully you feel excited, confident, ready to get going. If you would like to book an appointment with me, you can call me, text me, email me, or go to my Calendly link, which is this link right here. So you would go there, pick a date and time. If it works, I will go ahead and honor that. If it doesn't work, I'll reach out to you and say, hey, you know what, I have a conflict. Let's maybe pick a different day, different time. Same with Pete. You can reach out to Pete directly, coordinate a time with him, and he will be happy to address your situation via Zoom, in person, or over the phone. Again, my Calendly link is right here. My website for home searching is here, although I like to build your search through the MLS. This is what it looks like when you go to Calendly. You pick a date, you pick a month, you pick a time. You could click, and then I'll get confirmation of it. We never discriminate. We want everybody to buy a house, and we want to help you. I have a little quick survey if you wanted to take a little housing survey at this QR code. It'll take about 2 minutes. When you're done, I will send you a travel certificate for travel in Las Vegas. It's a travel certificate. It does have I think it's a $99 cost to activate it, but it allows you to go ahead and book lodging. Generally, it's at the Westgate or at the Rio. and you pay the room tax. You don't have to take any timeshare presentation. It does expire in 18 months, so if you're not going to use it, don't sign up for it because it costs you. Here's the terms and conditions, which you will see at the site. Well, also, I'm throwing something in here for the people that stayed to the end or people that are watching this. So this is a test um, of effectiveness of this PowerPoint. If you're still watching, and if I help you buy a house in the future or sell your house in the future, I will pay up to $675 for your home warranty. And this home warranty would last, this particular one, 13 months from your purchase closing. And it protects you in the sense of it's a first line of defense for things that might break, whether it's electrical, appliance. It does have a list of things that are covered, and it does have small fine print, of course, like all warranties, with a small deductible. But I will buy this for you if you remind me. So if you say, "Hey, John, remember you offered on that PowerPoint that up to 675 for buyer home warranty?" And I'll say, "You bet," and then I'll buy it. But if you don't bring it up, I won't bring it up. So it's just a test to see if you've actually watched all the way through. So thank you. Hopefully you do, and hopefully we do business. I can get that warranty for you. This is a copy of my business card. You can take a picture of that. Also, you'll be getting a copy of the PowerPoint, so you can reach out to me, um, later. You don't have to do it right now. And with that, I'm going to stop my screen share, open it up to questions, and how can I help? Or how can Pete help?
It looks like Melissa's got a question for you.
Do we need to be pre-underwritten before meeting with you, John? Um, No. Before we go out to look at property, yes. But no, to have an initial meeting where we sit down and I explain everything, happy to do that in person, or via the phone or via Zoom like this. So no, you do not have to be pre-underwritten to have our first meeting. Are there any other questions?
Melissa put up another question for you.
Can you put up the QR code for the survey? Yes. So let me go back and share my screen. Okay, so it'll be right here.
Any other questions, anyone?
Any questions about anything? We're happy to help.
I
Okay,
always say, there are no dumb questions because if you have the question, someone else probably has the question.
okay, well, I'm going to stop the recording.